Thursday, December 19th, market analysis, Standard Good morning, 9:56 California time. And we are recovering, so to speak, from one of the biggest down days I've seen in years yesterday. After the FOMC Fed announcement, apparently and very obviously, the market took it as disappointing. Certainly not fatal by any means. But everything was primed, as I talked about, for at least a week, if not more, prior to yesterday for a break. I did not necessarily expect it to come down to almost 20 points lower in a single day with one of the biggest volumes we've seen in years. And in a single day, break support, drop like a rock, make new lows for way over a month, and in some cases reach my expected support area and get oversold all in one day. Very, very unusual. Again, I've been at this 53 years, watching the markets from a technician standpoint. I probably can name, well, I can't even remember, but there's probably a dozen of these things at the most in the last half a century. So very, very unusual, the combination. Now, what's next? That's what you really want to know, not what happened. You can't turn the clock back. Well, we get a little bit of a bounce today, no surprise. Pretty much overdid it too quick, too fast, too much yesterday, and oversold, and at support, and at an objective. The question is, was yesterday's low around or the low before the Santa Claus Rally starts? And I'm going to talk about the Santa Claus Rally immediately this morning because we're going to be a buyer tomorrow morning, Friday, 3 business days, trading days before next Wednesday, Christmas. We'll be getting into more next Monday and Tuesday morning because of the strategy. And I'll be gone next week, so I won't be able to make comments about it. I'll be back the week after next week, Christmas week. Now, we're going to be buying early in the morning, shortly after the opening, approximately 10 minutes. And there is, in my opinion, a big fault with the Santa Claus Rally because you never hear anybody talking that I remember about money management, a protective stop. You buy it and you let it go. Now that to me is suicidal. If it doesn't work and you're just holding on to a long position that's going straight down, ouch. Dumb. Terrible. So always use good money management, decide on some risk factor to make use of, and use your common sense. But the entry is supposed to be approximately 10 minutes after the opening on tomorrow morning, Friday, 3 business days before Christmas, Monday, same time, 2 business days before Christmas, which is Wednesday, and the day before Christmas, a trading day before Christmas, which would be Tuesday next week. Then we're just going to hold on supposedly, but that's insanity. I do not have a stop for you. I do not have a recommendation, but I do absolutely, unequivocally, emphatically recommend that you don't just sit there watching it deteriorate terribly. You're supposed to have up to 3 positions. Some people might get into 2 or maybe even 1. You're going to try some other alternative. But the rules that I have come up with for the last 10, 20 years for the Santa Claus Rally is exactly that. Now, I'm sorry to say I don't have a track record for you this morning because of all the activity we had yesterday, and I planned to do it, but I couldn't get around to it. But it is, I think the number is approximately 66% of the time it's profitable 2 out of 3 over the last about 30 years, maybe 35, somewhere in there. And we base it on the S&P 500, SPY. You can try doing the back testing on the DIA, the Dow Jones, INDU, whatever index you'd like. The results should be very similar, but a little bit different. Maybe more profitable and maybe a higher degree of percent profitability, maybe the opposite. But in general, we're probably going to find out that the Santa Claus Rally, on the average, does pretty well. 2, 3, I think it was years ago, it was multiple thousands of dollars, 2 or 3 thousand that it made for the Santa Claus Rally. You just check the charts, see what kind of a huge rally you got just before Christmas, starting just before Christmas. And I don't care if it's going up, down, or sideways. That's not the point. Simply buy it. Whatever the trend is, early in the morning, 3 days, 2 days, 1 day before Christmas, trading days before Christmas. And we'll get to the offset after I get back. So that's the Santa Claus Rally for you. There are variations. You can Google it and find out a variety of stuff, but basically that is the answer. And again, I've been watching this very closely, like the October lows, which didn't work last year, or rather this year. But the previous 2 years before, it was unbelievably outstanding. So, and the track record was like 90% for the October lows. Okay, so we got a little bit of a rally, which is failing at the moment. You can see we're making new lows for a few hours right now, this minute. This is a 1 minute E-mini chart. Look at the size of that break yesterday. It is gigantic, huge. So a little recovery, shell shock, and I think it could make new lows again, or at least get close to yesterday's lows. But I'm not quite sure if this break is over. I'm inclined to think it's not. But it's hard now to tell where it's going to end up stopping because it basically got to my downside objective, at least one of them, right in here yesterday, all in one day. Downside breakout around 6109, as I've been saying for days and days. Big break. I talked about having a large break, and I didn't expect it to be quite this large. And it broke the trend line without even blinking and dropped off below the first support level, and now has come down to another one I don't even have a marker on. I'll put a marker on it real quick here. Across this high right here, probably, yep, in a horizontal line. Yep, and that's good enough. So as you can see, it bounced off of it there. There's plenty of evidence that this line, approximately a little higher, a little lower, is support. But I really think we're going to get down to 58.00, give or take a little. So one more stair step down in the next couple of days, allowing a good low purchase, I hope, for the Santa Claus Rally. Back to the 1 minute chart, spent too much time on the E-mini. So minor new lows again, coming down. Yep, for a few minutes. Okay, what do we got for the spider? Not quite there, getting close. And of course, then the delayed data. But 1 minute chart, going to do the same thing, obviously. Now, the QQQ hit the trend line on the upward slanting wedge or channel, or if you want to call it an upward slanting pennant, they're all the same thing, basically. And it held, and we're bounced. Right now, we're back below. Oh, I can see my strategies are not loaded. Well, that's unfortunate, but not that big a deal. You can see, and I don't have any signals here recently. You can see we're a little bit below where we opened at the moment, and it's starting to slip off, but still higher in the day by a modest amount. And here's the 1 minute chart. Definitely, well, I can't say definitely. In my opinion, looking as if it's going to challenge yesterday's lows, which did bounce off of very, very accurately my support level. You can see that yellow zone right there. And yeah, that's it. I want to go back quickly to the daily chart here. And I don't have that support zone drawn in, but it's obviously based on the highs that we made 11.11. I'll draw it in right now. Pick the high on 11.11, go sideways, exactly horizontal, and bingo, there you've got it. Plus, it was the bull trend line, plus oversold. Well, not quite. Sorry about that. Not oversold on the QQQ. Now that's going to be the same for the NASDAQ, and this is the Qs. The NASDAQ did not get oversold, did not quite touch the trend lines, did break some support, but I am looking for lower levels still. I think the NASDAQ is going to get down to 20,650-ish. And I want to go back to the QQQs. My real downside objective here is probably going to be 50,503. Yep. Okay. So I'm looking for a bit lower levels in both cases. Now, the 1 minute NASDAQ, pretty weak, still coming down. All right. Expecting new lows. Now, I actually heard on the news them talking about the fact that this has been the longest streak of down days, which I've been talking about for at least 3 or 4 days. We had one day when you had the lower high and a lower low and a lower close. Again, 2, 3, 4, 5, 6, 7, 8, 9, and a whopper 10 days in a row where the high was lower than the previous day, the low was lower than the previous day, and the close, say at least yesterday, lower than the previous day's close, all in a row, marching its way straight down, highly unusual. Don't remember 10 days in a row like this, frankly, ever. It may be a record of some sort, but this certainly looks very much like climactic selling. So I am going to continue to mention that I think we're close to a low of some sort. It could have something to do with the Santa Claus Rally. That'd be great if it kicked in. And this is now back to down to my original support level at 42,500-ish, which I have a line here for probably many months. So there's reasons to believe that these indexes could be very close to a final bottom. The 1 minute chart looks like it's going to come down and make a new low, but we'll see. We'll see. Most of the move down, I do think, has happened. And here we have the Russell all the way down to this next support area. Support in this huge resistance area, the yellow area, didn't even stop it for a moment. The trend line didn't stop it for a moment. It just plain washed everything out. Now, new support, oversold conditions, and I might add, not small. This is a very low RSI, 15 for daily data. And we had, the last time we were down to 15 or lower, actually I would say 25 or lower, we had a bullish engulfing and the market bottomed out for months. Now, I don't expect the same thing to happen here, but I wouldn't be surprised if we were going to bottom out very, very quickly. I keep saying that. And here's the Russell 1 minute chart, very close to the lows a moment ago. Okay, bonds. Not doing what I expected. I thought the bond market was going to stop dropping, probably at the lowest level, 15.5. But yesterday's new news and the Fed's implications caused it to drop below my expected support level. And now what? Well, head and shoulder bottom is still viable. I just have to drop this down, to probably something like this now, which doesn't kill the formation, but it better stop dropping very quickly. Which is exactly what I've been saying about the stock market. So we're a little below, but essentially at a previous trend line, now a bearish support line, which is the neckline on the single shoulder, head and shoulder bottom. If you erase this as a shoulder and you call that the first shoulder, the head of the formation is going to stay the same for either story. Then you have a neckline across that high and that high. Stop the rally. Dropped to the second shoulder and the last shoulder, went up to the neckline, fiddled around a little bit, backed off, broke through it, came back to it a little below, and then went up to the rally high, which is so far on a long-term pattern, big pattern, a year, 127.5. But where's the neckline? Way down here. And all we have done for the single shoulder pattern is come back down to the neckline. And did it again today. So this would be a relatively idealistic spot for the market to turn back up. Oversold at a support line, large formation, and I'm going to just move this away for the moment. Okay, I'll put it over here with the other one. Because now we've got the single head, single shoulder pattern breakout halfway up to its objective, which is about 140, and then down to the neckline, which is fairly normal, but a second time is acceptable, not very common. But we got to turn here. If you keep going down more, you're ruining this very large pattern. Now let's go back to the story about the double shoulder. And that is a very viable story, very viable. Basically October of 22, first shoulder, outside shoulder, then the inside shoulder 1 and 2. Head doesn't change. Bullish engulfing at the bottom, ladies and gentlemen. The reason I developed the ER signal trading system is to pick major tops and bottoms, and it picks minor ones also, and it makes mistakes. Even the mistakes offer short-term 1 or 2 day scalping, short-term swing trading potential profits. But the real reason for the development of this strategy is longer-term, major fundamentalist type, investor type turns. And you got one whopper, October 23rd of 23 in bonds. Past tense, whatever it does now is kind of like we don't care because it's already gone up a huge amount for a long time. But I'm still looking at this as a possible double shoulder, head and shoulder bottom for 2 years. This is the last shoulder low. Still, maybe I can't eliminate that commentary. It's just gone down lower than I expected, but it's still maybe the last shoulder low of a double shoulder 2-year pattern. If that's true, we're still going to turn up. And I have to say, big time. The upside objective is 150. Okay, let's go to notes. And here we have the same story, basically. I'm going to drop this shoulder indicator back down to here. We're now approaching support. The market went down a bit more than I expected. Timing is a little further into the future than I expected, but it's not canceling out the pattern. We still have outside shoulder 1, October 22, inside shoulder, March of 23. Bottom of the market, bullish engulfing and notes. Also, neckline for the smaller pattern, breakout, classic, test, classic, test, classic, test again. So far, okay. Now, is this the second shoulder on the double 2-year double shoulder pattern? Could very well be. We just got to start turning up convincingly. And if that's true, I've been talking about the upside objective, obviously, for a long time, 126, give or take a little. And it's probably going to sink a little because now I got to keep moving my little measuring stick to the right, which is the upside objective technical measurement based on this distance, which will not, could not, and is not going to change. All right, let's go to crude oil. I'm sorry, still between a rock and a hard spot. No upside breakouts, sideways trading range, no signals. I wait. Same thing on the high heating oil, except we do have this broad downward slanting channel. Bear trend line across the tops, pretty good, 3-4 points, give or take. And this one across the bottoms, 1, 2, 3 points minimum. You need 2 at least. So the third one's proof the line is pretty good. That's good. So I am looking for eventually move down to about 2 or lower, 1.9, 1 point, yeah, a little below 2. Beginning of support, test the line, see what happens next. So a pretty good move down from 224 where we are. down to 1.9 and a half, 1.95. All right. Now, another head and shoulder bottom may have formed. The last couple of days, we've rallied pretty decently on natural gas. Today, we've actually made a minor new high for a couple of weeks, maybe 3 weeks or 4. It's not staying there at the moment, but we're still higher on the day by a goodly amount. So if it closes here, I'm okay, and it gets above today's high again tomorrow, I'd be very pleased. I have made a minor adjustment on my last shoulder, which has maybe happened a little sooner than I would have expected. Usually the distance from the first shoulder to the bottom of the market, the head. And by the way, I've got a buy signal on both the low of the first shoulder and the head of the formation, both of them. Unfortunately, we didn't have a bullish engulfing, but we did have Unfortunately, we didn't have an ER buy signal. We had a bullish engulfing 2 days ago, but we weren't oversold, so I didn't get my buy signal. Here we're oversold. Here we're oversold. And here. So it actually has worked very, very, very well last several months in natural gas, my strategy. Okay. We could be on our way up. The bullish engulfing on Tuesday got this started. Neckline is right here, the cyan line. Upside objective is right here, 4.8. Keep a close eye on this big move if I'm right. Now, again, head and shoulder top. It is my favorite pattern. I do see them usually much quicker and faster and more easily than most people. I have seen probably thousands of these things, both small, 5, 10, 30 minutes to a normal size daily data chart, a month or 2 or 3, and larger. The biggest one, if I remember correctly, was the dollar index, and it took 10 years to form the formation and a few years for it to work, and it did. I'm thinking way back in the late 70s, 80s, 90s, somewhere in that broad time frame. But anyway, I remember Bruce Babcock, and he asked me to write an article for him back then when he had a market letter. An old friend of mine, he passed away from cancer, I think. Sorry. All right, so what do we got? Shoulder, maybe a double. The head, not very close to a double, and maybe. No highest high reversal, but a good one right there for a few days. That one wasn't so good. It lost a little bit of money, but the top is still there, overbought. Came down. I don't like this gold neckline being so downward slanted. But look, we've made new lows since the middle of November. Well, actually, since a little bit earlier than that, on a big break yesterday, and it's not really bouncing very much. In fact, I think it's just, still slipping off a touch. I'm wondering why this says 44 lower when the net change says a little higher. I'm going to go with the chart. I think it's a little. I think this is wrong for some reason. We could have a little glitch this morning, but it's not a big deal. The big thing is, watch out. This could be very bearish. I'm looking for 2250 on the downside in gold, maybe a little lower in the next few months, maybe several months, because this is such a big move, if this works correctly. Silver, breakout today, same pattern. I screamed bloody murder when we had the bearish engulfing on 12/12. Go back and watch that one or the next day. It may have happened after my YouTube. So the next day. And you're going to see the red. And it's been down one sideways, 2 big days down, 3 days now. So that's 3 out of 5 days since the reversal down. And nothing really up, just a little bit sideways. It's breaking support. It broke the neckline. That's a bearish breakout. Now, if we stay below the neckline on a close today, the official, let's hope it works, no guarantee, is 2470 for the minimum downside objective and maybe a little lower. Remember, these are minimum objectives on chart patterns always. Next objective, minor objective, 2844.44, because it begins a bit of support, and that lasts until about 27.5. But that could only bounce off of that a little bit on the way down. What about platinum? Well, I'll be damned. We do have a head and shoulder top here as well, downward slanted neckline. Let's see if I can pull that up a bit. No, let's do it this way. I like that better. So on the top of the market, back on May 20th of this year, we got a bearish engulfing, the exact high day. Come on. Can't do better than the top. And October 30th. Now approaching the neckline on this pattern, downward slanted neckline. The minimum downside objective on platinum is let's call it 790. I'm rounding it up or down just a little bit because they're not necessarily exact. Well, they're not exact. It gives you a really good expectation or ballpark. And if you get 90% of this, hell, you got a great trade. So I am looking for a breakout very soon, and it could be today or tomorrow or next week. Copper. Sell signal a few days ago, smack on top of the rally again. I'm sorry, this just keeps happening. And on that rally high, also September 30th. Yippee. Also on the bottom there, close to the bottom there. I'm not really worried about the signals that were bad, and that one wasn't. That one was a small profit. This one was bad. Maybe even a tiny profit for 24 hours, maybe 2 days. But the stop takes care of it. I don't get hurt badly. I don't procrastinate. This is an automatic trading system. You don't have to do anything if you don't want to. You can adjust the stop if you need to or want to, but I don't necessarily recommend that. It's made to make money all by itself. But, the markets are dynamic, and I think it's a little bit foolish not to have some flexibility. All right. We're short from 12-12-24. Still short. Challenge support. New low, but now a little oversold in support, so it's time for a small bounce. After the bounce, if it doesn't go too far, I think we're going to make new lows for the trend. And that would be a very profound, longer-term downside breakout. Well, frankly, into a lot of support area as well. So the next stop on the downside might be, 3.8. Next chart. Soybean oil, soybean meal, corn, wheat. All of them are not looking bullish at all. In fact, soybeans, as you see right here, are making a new low. And I think my standard daily data load is 1,000 days, so that's almost 3 years. Is making new lows for that 1,000 days, probably a lot more than that. Not too much sense in loading a lot more data. Takes a lot more time for it to load, do the analysis and stuff like that. New lows for multiple years. It is oversold. I do expect a bounce. If it does come back up to 975, it should stop right there. It might not even reach it. The trend is down. I'm looking for lower levels and quite a bit. We're breaking support on soybean oil. It looked like it could develop, might have been developing, did not. Now, from Tuesday's breakdown, yesterday's follow through, and today's small bounce at the moment after a new low, it's just not bottoming out yet. I'm looking for a test of the bottom, the recent bottom, 37.25. But then I think there's a chance it could break down below 35.40. Next, meal, soybean meal. New lows since October of 22. 2 years. Support levels didn't hold. Huge support. Didn't work. Yesterday and today we made new lows. Again, for over 2 years. I think we're going to come down a lot more. I can't help myself. It looks like at least 26 That's 261.70. And I can't rule it out. Maybe all the way down to 175. Wow. Long-term bearish. Corn. Upside breakout never happened. No follow through. I have erased my head and shoulder markers and the neckline and the objective. This is just below the neckline, old, which I've now hidden. And it's back to a sideways range with a longer term bear trend. It could just simply test this line, but that'll be a new low for the move anyway. I'm looking for a test of the first test, 408, next test, 395, implying that on a test it might bounce a little bit, then fail, make new lows, bounce a little bit off of 395, and then even make new lows after that. Sorry, long-term bear market, resistance levels, profound resistance levels stop the move on the upside at overbought conditions. And corn has been one of the strongest lately, making new highs for a while, since July. But it failed. Meal. New lows. Wheat. New lows since the war. Since the Ukrainian war, which we did get a sell signal on the exact high day. One of my most incredible double limit up to limit down, bearish engulfing, gigantic, scare the heck out of you, sell signals. It worked. Unbelievably big. So we came down from give or take about, I don't know, I'll give it a lot of fudge factor here, 13 and a half to what we are now at. It was 1365 down to 532. What can I say? I'm looking for quite a bit lower. We'll try to come up with downside objectives, but a little bit of a no man's land here. Next, cattle. New sell signal just a few days ago. Every single day, Tuesday, Wednesday, and today, Thursday, we have seen a down day and pretty good ones. This one in progress, down a half a buck, 64 now, hundreds cents. Touching support. Maybe we'll bounce, but we're not oversold. Not really very good reason. Don't trust the bounce. Would sell the bounce if we get it. First downside objective is approximately 184.40 and then a 183.50, I've got to say. And then we got 182.15. And then we got a trend line to deal with, and I'll extend that up a little bit more. By the time we get down there, it's going to probably be up to 182 anyway. So yeah, I'm going to say 182 looks very good for a sizable bounce. Hogs, looking for lower levels. I don't think support's going to hold. Next stopping point after we break the low of, what would that be? Tuesday of this week, Monday of this week. Then I think we're coming down to 77 and very possibly lower. Next. This is that individual stock that I've been following for now maybe a month because a friend of mine asked me to. And you can go ahead and ask me. I may or may not do it, but depends upon what I find. This is SQ. I don't care what the name of the company is. It's irrelevant. I'm a technician, a chartist. I tell you what I think is going to happen based on what has happened. So if you don't learn from the past, you're making a big mistake. Neckline breakout. Now, I didn't talk about this pattern until now, right now. But yesterday we had a bearish engulfing, and all of a sudden I realized, hey, that looks like a possible shoulder. Not only that, but look, it's almost perfectly symmetrical. From the high of the first shoulder on that day to the highest high is that number of days. So you take your little horizontal measuring stick and you go to the right and you miss by one silly day. Yesterday's high was one extra day, very close to exactly correct. Outside down day, bearish engulfing, almost perfectly on time. Neckline slants upward, so the shoulders can slant upward a little bit, which is exactly what they did. And in the one single day, last shoulder high, downside breakout, minimum downside objective now calculatable, if that's a good word, 82 and a half. And we also got over halfway down to its minimum downside objective, which, by the way, go listen to my YouTubes, was and is my support level. I think I said several times the low 80s. And maybe I pinpointed 82 and a half. I don't remember. You guys have a great day and profitable trading to you.